For me, it just varies, right? Like
Mm-hmm.
I have fundamentally my strategy has changed over time as I'm learning, and that's why I said my biggest learning was starting early.
Yeah,
Um,
good
maybe
point. Yeah.
the old me would have, if from 2015 or 2016, would have taken a lump sum. Figure I'm like, okay, I'm done. Either I would have done one of two things. Either I would just park it and go like, hey, I really don't know. I don't understand the market well enough at this point, and I'm just going to let it lie there, which is the worst thing I could do. Or I would say, hey, I think this is a great investment, and I'll go and dump it there. Both I don't think are the right things, at least for me. And as Akhil pointed out, what my thing has changed over time is I've started planning a lot more. So when you're getting this, let's talk about the hypothetical scenario of like getting $100,000. If it is expected, let's say if it, unless it's a lottery, which is then unexpected, but also in lotteries you can then figure out how to get paid over time versus paid in one shot. But if you're able to figure out how your income streams are coming in,
Mm-hmm.
I have started using that as a mechanism of figuring out how to then use that to channel my investments. So if I'm planning to like say sell some stocks for whatever reason, I'm like, okay, I'm getting this income. What am I doing with it? Am I going to park it for the short term because I'm expecting the market to react because I'm like it's highly overvalued and in the next 6 months to 2 years it's going to drop? Should I just hold it? I'll think about
That's
it.
market timing, though, right? That's market timing.
It is market timing, but then it's all driven by some of my like the fundamentals, right? So, or you look at what do you say? Like, I give an example, right? Let's assume you're expected to come into some money at say early Feb of 2020. You already
Okay.
are seeing that
Let's say
COVID
it's a
has
company bonus, something.
Okay,
yeah,
you're getting 100K. You're getting
you're
100K
getting
on,
100K. Now
on Feb.
you
Okay.
see COVID is happening, and you're like, hey, COVID is happening. What is it going to look like? You're like, okay, this is going to impact the world supply chain potentially because it's impacting China. So this might take a while, but potentially stocks are going to start dropping. So I'll say, okay, let me wait for the market to start reacting. If the market has not yet reacted, but I'll be like, as soon as the market reacts, I'm going to start dumping it in. The market does not react over a couple of weeks. I'm like, okay, the market has not reacted. Maybe I overthought this. I'm going to just go ahead. Like there's a circuit breaker in my head where I'll go and invest it.
So
So
I do the same thing. I agree with you, Shashank. That's what I would do also.
yeah, like there's a
You
circuit
actually
breaker,
elaborated a bit.
and yeah, if the circuit breaker is breached, you're like, okay, time to invest. But yeah, my strategy has fundamentally changed over time, and it's continuously evolving. And I'm pretty sure you ask me the same question a year from now, it'll be very different.
It'll probably be different. Yeah, I guess, and
That's
that's
actually a mistake, right? Because when you change the strategy too often, I mean, I'm guilty of this too. I think, but when you change the strategy too often, you don't know what's worked for you, because what's worked for you over a period of a few months may not really actually reflect the reality.
I would disagree on that, because the way I look at my strategy is I'm learning every day. So I have more data points.
True.
You're
That's
learning
true.
based on your own short-term. Okay, for example, let's assume a guy who decides, hey, I'm going to put a lump sum immediately, and the market, COVID happens and the market crashed. His learning would be that you should never put a lump sum into the market.
Yeah.
As opposed to a guy who has a different experience. So it's based on your experiences over a very short period.
But I guess, Nitin, I think what Shashank means, I don't know, Shashank, I'm speaking for you, but correct me if I'm wrong, right? So, but what you're saying is you're not changing your strategy, you're evolving your strategy. So it's not a step shift, but it's a slight evolution to what you've learned over this thing. So it's not that one learning on March 23rd of 2020 is completely changed your strategy, but you've evolved it because you have an additional data point. I don't know if that's what you mean by what you're saying.
Well summarized.
Okay, yeah, because that's kind of what I do as well, right? Because like I thought in 2015 my strategy was perfect, and then in 2016 I thought, oh, now my strategy is perfect. Fast forward to today, I think now my strategy is perfect. I don't know, right? And maybe I learn something in the next 6 months to a year where I'll be like, maybe I need to add this additional data point to what I would what I would do as my strategy. So okay.
So what is your strategy right now?
So that's very simple, Nitin. I think predominantly ETFs. There are a few companies based on um, certain, and they're very specific, right? I mean, I think we should go into details about that in another video, but I can talk about those companies. But there are predominantly ETFs based on sectors that I think are going to go up, right? So there are specific sectors, and I can name a few. Like I think 5G.
Hold on. Sorry, just before that, right? Let's assume that right now you're earning 100K or whatever, right? As an example, and or you get, let's say you get 10K monthly. Which or 5K you can invest a month, right? Of real income, 5K. Then what percentage, or do you have the strategy where you have a fixed percent for equity or something for real estate or mortgage payments? Was it planned, or do you have something for gold and other assets, or do you have something for fixed income like bank, debt funds, and or putting do you have a ratio or anything of that sort? Like, or do you like go all the way in? And within equity, do you have large cap, small cap type allocations? Do you have an allocation strategy?
Okay, so that's
before we go into that stocks part.
Okay, so good question. All my investments is currently in equity, Nitin. So everything that I invest is all in equity, right? Now in different types of equity. So there is within equity, I've also I must say that it's partly cash, partly equity, and how I do this is that I've put a limit on my cash, right? And what I mean by that is I've set an upper limit of my cash percentage of my total portfolio is going to be 35%, right? So if I have more than 35% cash as part of my overall portfolio, I'm going to buy equity. And then the lower limit on my cash is 15%. So if I go lower than 15% in cash, I will probably sell equity and move it to cash and my thinking of that is that if my equity is ballooned up too much, I can sell some of my winners. Mostly I try to do is sell winners, but sometimes I might say, okay, I want to cut or prune a few losers, which I think it really depends, right? So it's going to depend on that specific thing. So that's when if my equity has gone up over 85%, right, which is 15% cash. So if it's gone over that, I try to cut a little bit of my equity and put it into cash. And it's the same thing where my equity has gone down, which probably means that my stocks are cheap at the moment, right? So if I'm at 65% equity and 35% cash, that means my stocks are cheap. So what I would do is slowly start buying stocks so that I go back to my, let's say, approximately 20% cash. So that's
the strategy. Basically, you have an asset allocation strategy.
Yes, absolutely. So that's my overall strategy. Nitin.
Then I interrupted you. You were saying you're talking about your sectoral.
Yeah. So within that, I have specific sectors, Nitin. I think things that I think are going to do well, like IoT, like 5G, like genomics, and a few things like that, right? So there's this thing called the war on cash, where think about 10 years back, how much of cash we had in our wallets as compared to today. So, but it's not that we are worth any less. It's just that we are still transacting cash, but it's all a lot through plastic, right? And every time we use that plastic, or some people would say metal cards from Chase, right? Is that every time we use that, there is a percentage that goes to each of these banks. So can we invest in some of Visa and MasterCard and all of that? That's constantly getting a percentage of the money that we spend, and that thing is constantly increasing, right? So there are certain sectors like that I've invested in, and I think that's a very good question, Nitin, because we should do a full video on that in terms of the sectors that we've invested in. But at a high level, that's my thinking as to sectors that are growing and companies with business models with revenues that will probably grow. And I think we should do like a full video on that, because I would love to talk more about that, Nitin. But so any thoughts on like your strategy, Nitin, or Shashank? You spoke in detail, but what is your strategy, Nitin?
I don't. Okay, so for me, I mean, I don't really. I eyeball an asset allocation like debt and equity. Debt means fixed income, right? Debt funds, and equity is have predominantly index funds and direct equity. And so, but I don't know. I don't follow the sectoral stuff that you talk about. I don't try to guess what will do well. So what I do is because I tried doing that in the past. Well, I tried thinking. I didn't actually implement it. I just made a mental bet like, hey, this might do well, but it didn't. So I'm like, okay, right. I don't know. I don't just, market isn't rational in my opinion. It's not that the market isn't rational. Maybe I don't understand it, but it doesn't make sense to me. So I don't try to make sense out of it. So my strategies, I just invest in large caps. And unlike the US, I mean, unfortunately, India, we don't have that many good companies. And I watched an interview by Shaquille O'Neal, which read an interview by, I think, was it Shaquille O'Neal? I think, yeah, someone said that he apparently got to pull this well. He put a lot of money in this, in Alphabet when it was, Google when it was pretty young. And he said that his investment strategy was Jeff Bezos apparently told him that invest in companies that change the way you live or make a huge difference back to people. And if you do that, then most likely you'll win. So apparently that kind of struck a chord with him, and he did that, and it really worked out for him. And even when I read that, it made sense to me. But again, in India, we don't have those kind of companies. Like, if you think about it, even 10 years ago, you guys probably would have guessed that, would have come up with a list, and that would have included Amazon, Facebook, Microsoft, Apple. Yeah, Tesla not 10 years ago. I'm talking about 10 years ago. Would you have guessed Tesla? I don't know. You would have? Okay. Okay. Then that's great, because you would have guessed those stocks. So it's not just hindsight bias. You would have, even 10 years ago, we knew these are the companies that actually change the way we live. We automatically go to Google. So these would have been winners, I think. So that actually struck a chord. Unfortunately, in India, we don't have, I mean, when I think of that, I cannot find too many companies, or even only one, which is, kind of, really not like the US, but I follow that strategy. And yes, I don't do small caps at all, because I find it risky to average out small caps. I can easily do that to a large cap, make more money, and I can put a lot of money in large caps. I only put peanuts in small caps. And when you invest peanuts, you don't get much, you get peanuts. So yeah, that's my strategy. That's it. I don't look at sectors because I don't understand it much. But of course, I have allocations in different sectors, like automobile and stuff. But I tend to reward the underperformer. Hey, automobile is doing badly, and I think long term. So because I'm invested in large cap, I don't have to sell if it does badly. I can easily buy out. So I don't worry about dips. So I just happily buy. So far, it's worked for me in the past 3-4 years.
Interesting.
Shashank?
Yeah. My strategy is actually, I think, probably most complex of the three of us. Although, definitely,
I know. But go on.
He knows in water. He knows in water.
I actually have been thinking about it.
Yeah. Okay. What's your strategy?
I also believe that trying to invest in companies that fundamentally change how we as a society behave and live. So that is definitely a big driving factor. But also the way I have it is, like, I do have 2 circuit breakers, a lower level circuit breaker around how much of cash I need, and the way I call it is my rainy day fund. At the same time, I have an upper limit on the amount of cash I want to hold. And the reason I do that is there are certain stocks that I fundamentally believe in, certain companies. And if I feel like they're undervalued, I go straight away, use this extra cash and buy it. And
I know, I got it.
Yeah.
Interesting.
That's great.
Because so that is there. But then I also have a mix where I invest on a monthly basis in a bunch of robo advisors like Betterment or Titan Invest. And each of them I have like multiple ones because each of them have a very different strategy. And I believe in their strategies at a different level. At the same time, I have gone ahead and invested in like art.
How do you do that?
So there's this company called Masterworks, which what they do is they buy these famous pieces of art, create a security out of it, and then they create shares of this security and sell those units. So I don't have to go and buy like $1 million Picasso, but I can buy a percentage of it. So I'll spend like say 2,000 and buy a percentage of the Picasso.
So art is like they're like REITs, right? But for art.
Yeah, exactly. But yeah, so I have a mix of that as well. So yeah, I'm obviously it's evolving. So tomorrow I don't know what I might do next. At the same time, I try looking at potentially now, like you can see if I can like invest in private companies. There are ways of trying to do that. We're trying to see how can you get on that. Like,
Are you talking about venture capitalism or something else?
Yes, but like you don't have to be a venture capitalist, because at venture capitalism you get a seat at the table. Without getting a seat at the table, how can you invest? Like there's secondary markets which sell and stuff, so potentially getting involved.
Oh wow, okay.
So I have this it's slightly complex, but yeah, I try putting a whole bunch of different bets and trying to figure out how to use them.
Interesting. Yeah. So if there was, among the three of us, if there was one person who had a complex investing strategy, Shashank, I would have guessed that was you. But